Hello and welcome to another video of Eternal Gains. This is the channel where I show you how to grow your stack in the most sustainable and most safe way. Now, I have to remind everybody not to panic. Yesterday was a brutal day, right? Everything was red, everything was going down, people thought the world gonna end, crypto is going to go to zero. But no, it already recovered a little bit, all right? So I want to remind everybody to keep calm, especially in times like this, when it's really going fast and going like, like a bloodbath. And I want to combine this video with some chart analysis, or called technical analysis, or for short, TA. Now, TA is a pretty controversial topic. There's like two extremes, basically. There's the one extreme which says, how can a few lines on a chart predict anything? This is all hocus pocus. This doesn't work. This is just like for people. This is like something esoteric, basically, almost. Yeah. And then there's the other camp, the other extreme, which says, just give me a chart. I don't care about the fundamentals. I don't care about anything. Just give me a chart, and then I can basically predict my way, or I can do my decisions from there. Okay, so this is the two extremes. And of course, there's everything in between. I personally use technical analysis to an extent, not too much. Especially in DeFi, it is most of the time not too useful, because many times the projects are new and we don't have too much data to work with. But at least it can, or it helps me to get like, to get a sense for the market, to get a little bit of an understanding what is going on, and to put things into perspective. Now, yesterday, as you can see, people thought the world gonna end, right? Like it was red, red, red. And then we had this brutal wick down here. So on Ethereum, we went to 3,488, right? Which is pretty cheap for Ethereum. But then immediately recovered, okay? If you don't know what a candlestick is, what you are seeing here is a candlestick. And basically you have the opening price, you have the closing price, that forms the body. And then you have the high and the low of this candle. And each candle is basically one unit of time. In this case, 4 hours. So each of those candles represent 4 hours of time. Okay. I want to combine this video with the chart technique, just to give you some, something on the hand, what you can use if you are stressed out, or if you're in a state where you don't know what to do. It can help to just give you a little bit of peace of mind, okay? So if you look on a shorter time frame, like 4 hours, it looks really bad, right? It comes down a lot and you think, oh my goodness. But now if you zoom out a little bit, let's go to the 1 day, to the daily chart. Now it doesn't look too bad anymore, right? I mean, we always have ups and downs. Nothing goes only up or only down all the time. This is not how it works. It's always working in waves, right? For example, here we have a wave up, down, up, down, and so on. So it's always working in waves. But if we look at the long-term trend, right? Long-term trend, which started somewhere here in November 2020, then we can say, in general, we have a pretty solid uptrend. Yeah. The price was steadily rising, of course, with ups and downs in between. But in general, we went up pretty substantially. So the price here was only 480 bucks. And now we are at 4,500. So it's almost a 10x right there. Okay. There are different patterns, chart patterns. I mean, technical analysis is basically a science by itself. You can really dive very deep into it, and there's plenty of patterns and all kind of stuff what you could do, and indicators and whatnot. But I like to keep it simple. I just use basically very basic indicators. We just have two moving averages right here. Now this red and green is a custom indicator, like a little algo what I did myself, where it gives you indications for entries and exits. So long and exit, as you can see here. Now, when you're in a situation like yesterday and we are not sure what's going to happen, just zoom out. That's always the best thing. Let's look at the weekly chart. Wow. And now it looks already much better. You see, we had the same thing here. We went up, we came down, and now we are higher than before, right? But this pullback, so-called pullback, is not even as bad as those pullbacks over here. Can you see that? This thing went really nuts. And it went from 359 down to 21 in 1 week, right? What we see forming here is actually a pretty nice pattern, because it shows us that the price has been here within this week, but already recovered all the way up here, which means that the selling pressure was basically absorbed by buyers, which means the market thinks that this price down here is definitely too low. So people buy, price comes back up. And this could be a good sign for a reversal within the next 1 or 2 weeks, okay? Let's go a little bit closer. Let's zoom in a little bit now. The 1-hour chart, which shows us basically the recent action. Yeah, this is a much shorter time frame. But what we can see is that the price already starts to climb up, okay? Now, one very typical indicator, what you will see a lot, is the Fibonacci retracements. This one right here. What this tells us is, if we come from here to here, this is basically just percent levels, okay? So if we look from the high to the low, what we had here, then basically a 50% between those two values is here, okay? So 50% between this and this value is here. Fibonacci retracements would say now that if the price came down and would now reverse on the 50% mark, this would be a very bearish sign, meaning price came down up to the 50 and then it would go something like that, okay? On the other hand, if we could come down here, if we could break the 50, come back onto the 50, then it would be more something bullish like that, okay? So I use Fibonacci basically also just to get a little idea, what is the price doing? Now there's also different ways how you could apply those Fibonacci. So all of this is pretty, I would say, subjective, right? One person draws it like this, the other one a little bit different, but this is how I do it. So what does it tell me is, okay, be careful in this area now. I would like to see the price at least to come over the 50% retracement, okay, ideally somewhere here. And then we can go a little bit sideways and then we can go up. And then I would be happy, or I would basically be more confident that this was just a short-term dip and that we're going to go in the other direction. Another very, very common tool are trend lines. Trend lines are basically just lines on the chart which represent the direction of the trend and also basically when this trend is broken, okay? So in this case, we could make a trend line here, a support line in this case, because the line is supporting the price, right? The price is coming up and is always kind of bouncing off the line, okay? So this is called a support line. They can look like this, or they can also be vertical support lines, like for example here, okay? So assuming we are here, so now we draw our support line based on those 3 points, you know. It's of course not always 100%, you cannot, it's not super accurate all the time, but just roughly, okay, the price came here, it came up, it came here again. And now what we would look for in this case, in the next case, is can it hold this price again? Yes or no? So we draw our line. Okay, it happened. What happens? It comes up, our line holds again, and it's shooting up. Okay, so we could have basically predicted, or let's say we would be more confident that the price might come up from this level. If it's just like that, okay, it's just some candles. But with those lines, it gives you a little bit of a visual representation. Of course, those trend lines also work exactly in the opposite way. If we go downwards, for example, if we say, okay, this was a downwards trend right here. And as you can see here, this downward trend or the downward resistance, so to speak, was broken. Okay, so the price is not following this trend anymore from here. And now we are back in an upwards trend, and we can do the same thing again. So we see, okay, if you would come over here, or if we would go a little bit more like that, something like this, then you can see the price was bouncing off of this line pretty nicely. Now we are below the line, and you want the price to come up above this line, okay? Now, a very typical pattern, what you see a lot, is something like that. You have the price support line right here, and the price just does something like this. It comes here, it bounces once, it bounces again, it comes slowly above it, it pulls back to the line, and then goes down. This would be a typical pattern for a break of support. So the price was supported by the line, by the support line, it came below the line, it bounced off the line again, and then it went lower, okay? The other way around, price support held, price deviates a little bit, comes back above, maybe does another bounce, and then comes up, something like that, okay? So as you can see already, the crucial point is here. Is the price coming above the line again, or is it basically, you know, is the resistance, because first the line is support as long as the price is above it. When the price is below it, it's called resistance. So the question is, can it break the resistance, yes or no? If it can, then we have a good chance to go higher. If it can't, then we have a good chance that it goes lower. So these are some very common patterns you will see on the charts all the time. Yeah, I think this was a pretty basic introduction to technical analysis. If you have any more questions on that topic, please let me know. I'm happy to do some more videos about it. If you liked it, leave me a like and share it with your friends, and see you in the next one.